Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Monday, July 20th, 2020. As mentioned earlier today, I was going to take most of the day off. I had a slew of errands to knock off, and I figured no better time than today as we're heading into peak earnings. We have a very heavy economic calendar, or earnings calendar, I'm sorry, this week. There are some things on the economic calendar as well, but this week and next really are probably the hump for earnings. So we have coming up tomorrow, we have Texas Instruments reporting after the close tomorrow, so that might start to set the tone for the semis, followed by the beloved Tesla. Right now, tons of momentum into that stock. Tesla, Microsoft, both tomorrow after the market close. I'm sorry, Wednesday. We have Texas Instruments tomorrow. That was Tesla, Microsoft Wednesday after the market closes. In Intel on Thursday after the market closes. Usually your tech stocks, not always, but usually the big tech, the big movers are after the market close when they report. So that's this week. Two big semis, Texas Instruments and Intel, as well as Microsoft and Tesla. And then, of course, we have quite a few big ones next week as well. All right, so what stood out to me coming back in was the disparity today. We had a quite powerful rally in the NASDAQ 100. I'm going to go through the charts of the indexes. I'm going to compare this, the NASDAQ 100, look at the equal weighted index, look at market breadth. I have some pretty, I think, pretty unique indicators I came up with a couple years back to take a look at market breadth within any index or sector. A lot of those don't report market breadth, so we'll take a look at those and see what it tells us. But at the end of the day, nothing. It was a big move in the NASDAQ 100, but not a lot of changes in the technical posture of the market. So let's start here with the NASDAQ 100 because that was our big mover. So we're still below the top of last week's bearish engulfing candles. Those were last Monday, a week ago today, but really not that good, for the sell signal, which we never got confirmation. Remember, I say this often: bearish engulfing candles, although they're considered topping candles or reversal sticks, I like to see follow-through confirmation to count it as a sell signal, and we never got that. We had a green candle the next day, and nothing but green candles, and one little red candle last Thursday, but a small one. So we're back above. We pretty much closed right about the body of that candle there. We haven't taken it out yet, but again, this certainly doesn't help that, and most importantly, we haven't taken out Tuesday's low, nor have we taken out the trend line. In other words, we remained above trend and have. So that's it. NASDAQ 100. From if this was the only chart to look at, I'd say, man, quite bullish. And today's price action, obviously in the Qs, was bullish. But now let's take a look under the hood. We still have the divergences, although they were in place at the last high. We'd have to take out this previous high to extend the divergences. And if we do it anytime soon, that will happen. But let's take a look at the other indexes, and then we'll look at the equal weighted. SPY closed up a decent 0.81%, 0.8%, pretty much right about where we closed the day back on at that top of that island cluster pattern there. That was on Monday, June 8th, right there. And so that gives us, still keeps this divergence very much intact. I'm talking about the negative divergence here. You can see it on the RSI right there as I expand that out. Shows it a little bit better. Sometimes these lines tend to flatten out, and there it is on the PPO. So divergence, again, I say it often, divergence is not a sell signal, merely an indication of a trend change is likely. And so I've talked about how the trading range, we're at the same point we were a month and a half ago here, and even if you go back all the way back 7 months ago right here, that's where the SPY. Now there was a big move, a lot of trades to be made between then, but what I'm referring to is here, the last 6 weeks or so in this trading range, we're back to the top of it, and you can say that the intermediate term trend, if you want to look at it this way, really from this whole period, if I box it in, let me do that for you, going back even farther than the last 6 weeks, back to here, this point to here, and we're at the top of that range, and we've been bouncing up and down there, but the very near term trend since the bottom here, or the low back here on June 29th, that's near term bullish. But again, bigger picture right there. So where do we go from here? Well, let's take a look and take a look at one more index, and that would be the small caps. unusual disparity between all the indexes today. To see the Qs up at one point, it was close to 3%, closed up well over 2, and you're seeing the small caps down 0.343%, so down nearly 0.5% today. So the story on IWM is it popped above this purple line, but it's still, as I've been saying recently, that's really a range between 145 to 146, and we closed today at 145.96. So, if I were to add, and it was just too close is why I didn't have another line there, you'd have to almost overlap the lines, but that would be it about right there. So, we're at the high end of the recent trading range there on IWM as well. So it broke out, above 145 last week, but no follow through. Hasn't gone down yet, so you're not going to say that's bearish. It's hard to argue that's bearish, but it's not. There hasn't been any bullish follow through to the potential breakout. We need to clearly start walking away, print a daily close well above 146, and start walking away. And if that happens, with the breadth deterioration, I don't think the markets have that much more upside. Hard to say, because there's a momentum trade going on right now, which is again unseen, especially in these big FANG stocks. You usually don't see that, and that's going to continue until it does. I hate to say it that way. It's kind of a yogiism. The trend is up until it isn't. So we watch those levels on QQQ. All right, so now we can see that there's been at least today. That's just one day, but quite a bit of disparity between small caps and the large caps, particularly the Qs. Let's go back to that and just look at a couple measures of breadth. This is QQQ again, and you can see up 2.84%. Now if we look at QQQE, which is the equal weighted index, has the same basket of the 100 largest companies in the NASDAQ 100, and instead of 2.84, we're only up 1.58%. Still within this wedge pattern right here, rising wedge pattern right near the top of the wedge. No sell signals on the equal weighted Qs yet either. You need to take out this trend line, and then more importantly, or as importantly, I think, both pretty important levels, about that 60.29 or so support level there. So that's that just goes to show that again, fewer and fewer heavy-weighted, overweighted stocks like Apple, Microsoft, Amazon. You can see them here. We're doing a lot of the heavy lifting today. I'm going to get to that watch list in a second. We're going to look at something else. Then you have the S&P 500. Up 0.81%. You can also look at the equal weighted S&P 500. You can look at it via the ETF, which is RSP, and you can see down 0.53%. You can also look at the actual equal weighted index itself on this program. This is TC2000. They use SPEW. Same thing, down 0.5%. So there's a pretty big disparity there. 0.81% and 0.5% down on the equal weighted SPY. And again, the reason is SPY, just like the NASDAQ 100 as a market cap weighted index, although the NASDAQ 100 does apply a much higher weighting to the big FANG stocks than does SPY. So that's why you don't see such a disparity. But it just tells you that yeah, things went up today, but not everything. In fact, we're going to get to that in 1 second. And let's do that now. Let's take a look at market internals. All right, so here's one way to look at it. You can see that I have the NASDAQ or the SPY, the S&P 500, sorted by market cap. There's a few columns I have here, and I'm going to point to this one here. This says capitalization, so that means the market cap, which is if you add up every single share of stock out there that's on the open market being traded, on the open market, and multiply it by their price, that gives you your market cap. So all the shares of of Apple times whatever Apple's selling at, it gives you a valuation of 1.7 trillion. That's how they come up with a company's valuation. So you can see, world's largest company right now, at least the largest in the US here, at 1.7 trillion. Microsoft just behind it at 1.5, same with Amazon. And you can see that's what they did. And remember, they again have a top heavy weighting in the index. That's why, hence that disparity between the equal weighted. Some big gains, and it's that's what market participants are chasing, especially Amazon. We're going to look at that in a second as well. I want to get back to talk about some of the recent potential sell signals. Amazon did have some confirmation to its bearish engulfing, as did some others. So we're going to get to that in a second. All right, so that's a quick glance. Now what I like to do to look at internals is I'll sort this list by the percent that were up or down. And so if I do that, remember there's roughly 500 stocks in the S&P 500, exactly 504 in this. Some shares like Berkshire, you have different share classes, class A and B, so that's why sometimes you'll get more than 500 companies or more than 100 in the NASDAQ 100. So what I do is I scroll down. Again, they're ranked by the percentage losers here. So I scroll down till the red stops, and that is right here. I click on that, and if you can make this out, you probably can't in the video, but down below it says 325 of 504 of 504 items. That tells me 325 stocks in the S&P, well over half, closed down today. Yet the S&P 500 closed up over what was that, 0.8%. So that is a red flag right there. It's showing you the majority of stocks were down today, yet the index was up. And again, for the reason I told you, the equal weighting. Let's look at another one here. Okay, I wanted to look at IWM, small cap index. It was down 0.43%, so not a huge down, close to being flat, as much as Lisa's IWM moves, slightly down. And as I go through here, the same indicator, I have to scroll down. There's over 2,000 or close to 2,000 stocks in here. So I'm going to scroll down. You would think that, if it was flat on the day, roughly half the stocks would be up, half would be down, and go about to the halfway point. But I got to keep going. I'm looking at that first colored column. That's the percentage gain or loss column. And I get all the way down here, and I click on this one, the last red one today, and that shows me that 1,200, exactly 1,208 of the 1,942 stocks in there were down. So the majority of stocks today overall were down, and yet you had, like I said, most of the indexes up today, and that's again unusual. And again, it's not a one-day thing. I always say that one day doesn't make a trend, but we've seen a trend, and that trend is actually accelerating. Or let's say market breadth continues to deteriorate. Okay, and to wrap it up, it'll be a short video again, and there wasn't a whole lot that stood out to me. And cocoa was up today pretty decent. A lot of the other ag commodities were down, but the cocoa, which recently offered a very objective long entry, was up about 3%. Other than that, I didn't really dive into the charts. I hadn't been home that long, but wanted to point out a few things. And again, I started out with QQQ telling you that bearish engulfing candle from Monday, no confirmation yet, and in fact, if we move up much more, it really just takes away from that. Even at this point, you really don't want to see the prices get back above about the upper half, upper 2/3 of that candle, and we pretty much closed there today. So I'm just going to say that again, we didn't have confirmation on the sell signals, and even now it comes into question. Now, just because we had this big up today, if we didn't have such glaring disparity, or I guess between the price moves and the major indexes and the internals, I might say, wow, it's bullish action. It's bullish when something goes up, so don't get me wrong on that. Just not the kind of rally that I care to chase. In fact, the longer this disconnect continues, the more dangerous it is. In other words, where normally, based on the projections of these trendline breaks and the targets I talked about, we might be looking at we did recently get a 7% pullback or 6%, but this is leading up to maybe something much bigger, especially if this trend continues. It is just not healthy for the stock market to see such deterioration in breadth. So what I wanted to show you is some of the other sell signals that we got the other day. Remember, we had not just QQQ, but we had its closely related sector, XLK, put in a bearish engulfing last Monday. That pretty much has been taken out today. So any potential sell signal there, again, never was confirmed. Nothing but green candles, a little red one there, but we followed up with a green candle the next day, and we also held trendline support. So we never had a confirmation there, and now that's really just an insignificant candle, at least as far as XLK goes at this point, because now we pretty much moved back above it, and so that's not the nature of a bearish engulfing, which is a topping stick. So that's that. A couple others that we had. Oh, and just before I leave XLK, Does it change anything technically? Well, from the last week, all it changes is that potential candle as a potential topping stick. Now, because at this point, even if we reverse, we went over that today. It looks like by just a hair, so technically this would be the top. So that's why that's no longer a potential topping stick. However, we still are looking for a sell signal on the break of the trend line there, and then a break down below. Really, I want to see 101.79 go. However, make no mistake about it, the momentum's to the upside, and as crazy as this disconnect seems, yeah, that's the market. Back to 2000, what happened? Things just kept going up and up and up, and when every by every fundamental metric, it was just insane, the prices, but it didn't matter. People were buying, 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 because that's where the momentum was until it finally collapsed. So there's that. And now, in addition to those two, we also had Microsoft, and this is what I'm watching. We had 3 of the 5 FANG stocks also give us bearish engulfing, and we had some confirmation here on Microsoft. There was our bearish engulfing right there, and engulfed that candle. Ideally, it would have come at the high and engulfed that highest candle there, but it came with really close within the highs, and we did have some follow through to the downside, and we're still only about halfway up on that candle. So if Microsoft were to reverse soon, and remember, they're going to report, as I said earlier, they're going to report on Wednesday night. Usually a stock will go into a holding pattern before earnings. In fact, I'm surprised to see this. I suspect a lot of that short covering. I can't imagine after such a strong run-up that it's had, how overbought it is, and with everything deteriorating, how many people would be piling into this stock 2 days before earnings. It's always a risk as a swing trader or even an investor to take a position right in front of earnings, because it can go the other way. I've seen stocks like as big as Microsoft is, I've seen it gap down or drop 10% or more after a bad earnings report or bad guidance. It can go the other way, of course, and maybe that's why everyone's buying it, thinking they're going to blow the cover off the ball. But you got to say how much of that's priced in. So anyways, I just wanted to point out from a technical perspective that bearish engulfing candle has not been invalidated yet on Microsoft. Amazon, as said, was the most bearish looking of the 5 FANGs over the last week or so. They put in a big, clean textbook bearish engulfing. Doesn't mean it's going to play out in the long run, but that's as good as it gets. And so engulfed the previous 2 candles, came at the high, and followed by a trend line break. And 1, 2, 3, 4 follow-up red candles. Again, about as good as it gets. Now, boy, they turned the gas on it today, gunned it up, almost 8% gain on Amazon. I think they're reporting next week, if I'm not mistaken. Let me check that. Incorrect. July 30th after the market closes. That's Thursday. Anyways, big reversal, but they didn't take out that bearish engulfing yet. So as impressive as today's move was, certainly doesn't help the bearish case. And remember, you're going to need the majority of these FANG stocks breaking down right now. We had some pretty decent drops on most of those, and I wanted to point that out, that this one is still very much in play unless we go up much more from here. Now again, earnings kind of muddles everything up, but let's just take the charts on what they are. Let's just back out earnings, back out what may or may not happen, and just look at the charts from a purist point of view and saying there's a bearish engulfing, 1, 2, 3, 4 confirming red candles, and we're still above that midpoint. Ideally, for the bearish case, it needs to turn down soon, and we still have a big level. That's still my target down there, 2786.60. Do I have the highest degree of confidence in it being hit? No, only because what I'm seeing today. I came back in and just they continue to buy Tesla and and Amazon stepped in after what looked to be a very solid sell signal and confirmation. You get this 8% update. Just again, it doesn't fit very well with the whole correction scenario, but we'll take it for what it's worth. I can just tell you it's surprising price action, but not shocking. I've seen plenty of things like this before. All right, finally, there's Facebook. Facebook also on last Monday and put a bearish engulfing and wiped out several of the previous candles there. But it really didn't follow through either. In fact, it didn't at all. All nothing but green candles there, and held that 232.44 support, and it's kind of just moving around here. To step back, nothing's changed in the technical posture on these stocks. And even if Facebook, let's say they pop on earnings, and it's a marginal new high, and it cannot build on those gains. It reverses after. Whether it does that or goes down, it doesn't matter. We had negative divergence right here at that recent high the other day. last Monday. And should we make any marginal new high soon, that will still be a divergent high. You'd have to continue to go up quite a bit to take the divergence, to burn through divergence here on these indicators. So that's it. Really the same technical posture I've been looking at for weeks. We had a divergent high. We had a couple. We had a small divergence right here at this point, little drop. We had a little bit bigger divergence here at this point, bigger drop. And now we have the same divergence, consecutive divergences. And should we get one more? It only means most likely, there are no guarantees, but typically the corrections to follow negative divergence are usually commensurate with the scope, how the magnitude, how big the divergences are. And this is just telling me bigger divergent high leading to a bigger drop. And so maybe somewhere around there you can see two levels. I'll just tell you right now, whether we go up first or not, those would be my targets right there, about, and not hard levels, roughly 201.86 and then 193.49 if those are hit. So that's what I'm looking at. And let me see if there's anything else. No, let's keep this one short. So just an update on the markets. Nothing new really. Markets kind of grinding up. SPY still within the trading range. Market internals continue to deteriorate to the point where I think it's kind of moved from a yellow caution flag to a red flag where, wow, whenever the catalyst, if and when we get the catalyst that sets the correction into play, that's priced into the charts now with those divergences on the S&P 500, the NASDAQ 100, the daily, the weekly time frames, then I think there's going to be a pretty ugly bubble in these, mega cap, big, beloved tech stocks, Tesla, things like that. I think you'll see a pretty sudden rush for the exits. So until we get those sell signals, it's hard to fight it. We're going to end it here. And like I said, the only thing I think that's probably guaranteed over the next week or two is a lot of volatility. I doubt it's going to be all upside volatility as well. So, ideally in an earnings week, you want to keep things light. Remember that breakouts tend to be, whether they're upside bullish breakouts or downside bearish breakouts, if a stock makes a breakout right before earnings, you have a much, much higher chance that breakout will fail. And the other thing, and I'll leave it here on this final note, it has been my experience, I've said this many times over the years, holding a stock or trying to predict where it goes after earnings is a crapshoot. To me, it's random. It's 50-50 whether it's going to go up or down. And I'm not talking the day after or the day of. I'm talking the trend over the next few weeks to months. However, and that's just in a vacuum, if there's no clear setup in the charts. However, when a stock has a clearly bullish or a clearly bearish technical posture. I'm talking not the current trend. That's one thing. You can have a bullish trend with a bearish technical posture, and that's what we have here in Facebook. The trend since the March lows has been bullish. It's starting to slow down. It's starting to volatility, it's starting to expand. But to me, the technical posture right now is clearly bearish with the divergences in place and everything I talked about. Any new high soon still being a divergent high with little to no chance of those divergences being taken out in the next week or two. So therefore, where I'm going with that is, again, if a stock has a clearly bullish or clearly bearish technical posture heading into earnings, then I can tell you, or at least from my experience, that it has a much better chance of playing out. In other words, those with the bearish technical patterns or developments usually will, the next trend, the next tradable move will be to the downside. And again, that I caution not to read too much into the initial reaction when a stock reports. I'm talking whether it's that night in after hours trading or the next morning. It's quite often that initial reaction is faded and reversed, whether it's to the downside and then they step in and buy, or it's to the upside and then it goes down. So you just want to see what happens over the next day or two, because it takes a while for market participants, including the big institutions, to kind of parse through all the data and figure out which way the stock needs to go from there. So that's where we'll wrap it up. Again, most of these FANGs, these market leaders, to me, have bearish technical postures, and so I'll say it now, my money is to the downside within the next couple weeks here, because we'll have most of the FANGs have reported by the end of next week. All right, so we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.